Hello, ladies and gentlemen. Hello, guys, and welcome to this webinar today. Today is Tuesday at 7 p.m. in Australia, around 11 p.m. in Europe, or 7 or 8 p.m., 9 p.m. depends in which part you are located in the world. And myself and Admirals would really like to welcome you to this webinar. And before we start, just to make sure you acknowledge that this webinar is for general information only, and it's not intended to provide any trading or investment advice or personal recommendations. And I'm really thankful for understanding that. So, what we're going to learn today? Today, we're going to learn something that really many traders, they struggle with that, especially when they start trading. They have the impression of, I would like to learn to trade intraday, and I would like to trade the 5-minute charts, the 1-minute charts, 15-minute charts, 1-hour charts, whatever it's that intraday trading means for you. And the number one reason they are saying that, it's purely because I don't have patience to stay in the trades on the daily time frames or on the 4-hour charts. But unfortunately, in my experience as a professional trader, as a retail trader, as a trading coach, I find it that people, they lack some kind of knowledge how to take intraday trading. And I hope that after the completion of this webinar, you will be in a position to completely flip your trading activity in the proper way of how we trade intraday with high probable outcomes. We can trade the intraday charts however we want to trade them, but without understanding that probability has to be in our favor, most likely we're going to find hard times. So, about Admirals, just allow me to introduce who we are here. We are a Forex and CFD broker. We offer thousands and thousands of financial instruments you can choose and trade. We also are growing massively and rapidly as an investment financial hub. So if you haven't opened investing accounts and you would like to trade shares, ETFs, definitely I will encourage you to do it. So there is support in local language, of course in English, in any other language you would like. We do have the support. We hold license from multiple countries, first and foremost from the ASICs in Australia, the FCA in UK, CISEC in Cyprus, Estonia. Now we are taking Canadian as well license. Competitive spreads, absolutely. We try to keep them as minimal as possible for your own best interest, guys. And when it comes to intraday trading, the lowest spread, it's something you need to have in consideration. And of course, you can access our trading platform, our trading instruments, and trade them and invest in them through the platforms on your desktop, MT4 and MT5. But I will definitely encourage you for your mobile devices to use our mobile native app, because you can have all your accounts, trading account, investment account, all in one place. And it's much easier, in my opinion, to monitor your account. Just allow me to take a few minutes and just tell you very important things you need to know about what do we do here, that really they're gonna help massively your learning curve here with us. We do on a weekly basis the podcast. I do market analysis in about 4 or 5 minutes max. I go through the major market events on a weekly basis. We upload this on Monday on our website, and let me just walk you through so you know where to find it. And of course, I will share the link with that. So here you go at admiralsmarket.com. You go where it says analytics, weekly trading podcast. And every Monday, you're going to see the name, the major events of the week. Either you can watch it from, you can hear it, listen it from here, or you can download it from your on your devices. Also, I definitely encourage you, these guys, to share it with friends and family, because let's face it, regardless, other people, maybe they don't like to trade, or they don't know how to trade, they don't invest, but to have a fundamental view of what's happening in the global economy, I believe it's something that interests every single person on this planet Earth, due to the fact, especially now, because everything affects everyone and everything. All right, so here it's how you can access them. You can find it on the chat box below. You can click on that, and there you go. Also, if you haven't subscribed on our YouTube channel yet, please make sure you do it. And also, you can like the videos we upload, especially if you are not informed yet. I personally do the live trading sessions 9:30 local time. So your time, it should be about 6:30. Just please double check this one. It's either 6:30 or 5:30 in Sydney time, Canberra. I go through the market analysis. We read some major news events. We see the calendar of the day, and then we try to identify trading opportunities for intraday trading and end of day trading. All the webinars we do, we upload them here on the Trading Spotlight. Myself, Jens, and Pauls, you can watch them. You learn lots and lots of things about technical analysis. And the live trading, if you miss them, you can watch from the morning briefing show. After I finish the webinars, they upload it automatically on the YouTube, so you can definitely go and watch it. It's not just market analysis. I also go through some psychology, trading mindset, and investing. And depends what questions people are going to ask. We go through many things, and you can also come on board, join our webinars. They're free of charge, and you can learn lots and lots and lots of things about the markets, about your trading style, about yourself. That's going to help you a lot, guys, really. Then it's the Admirals Global Instagram page. Here we put a lot of stories on a daily basis. You're gonna be, it's a trading, it's an absolute great trading tool to have in your arsenal. We do some reels here, I do some funny reels here, but everything is related to trading. And behind, always, guys, behind a nice funny story, let's say, it's a real reality and a truth about our trading behavior and our trading methodologies. Okay, so please engage with that. It's absolutely good. And last, we do have the Telegram channel. You can get informed about all the activities they happen within trading. And please make sure you subscribe, you follow us on this page too, so you get informed. So without saying anything else about this, let's move on. For those who don't know me yet, my name is Theo. I started my trading career in Melbourne, Australia. Now I moved back to Europe, and I have an intense experience in trading and investing for more than 10 years. I hold a master's in physics. I'm a long-term investor. When it comes to investing, I like the automotive more and the tech stocks. And when it comes to trading, I start as a swing trader. Then when I learn a lot, and then of course with my job before as a active professional trader, I used to work in some firms. So The swing trading became day trading, intraday trading. Now, due to my obligation, the job, I stick to the swing trading because I don't have the privilege of time and to be in front of the charts all the time. Parambit, is it something you would like to tell me? You raised your hand. Please type on the chat box below and ask me your question. Thanks for that. And here at Admirals, I do the trading webinars, I do podcasts. I'm writing a brand new course from the website. We're going to replace the Zero to Hero with an update and most relevant conduct in the market. Soon it will be uploaded, and you're going to have the opportunity to skyrocket your trading and investing learning process, guys. I guarantee you on that. So as for today's subject, we're going to learn market structure and, in my opinion, correct reading of the market structure. Many people, not because they don't want it, but because there are so much information here on YouTube and on other websites that everyone can access at any time. And there are many people, they just looking to get you on the hook to take your money, to tell you this and that, and trying to give you trading suggestions, ideas of not losing, only winning. Guys, this doesn't happen in trading. Here with me, you're going to really learn how to definitely read the market in the proper way, in the way the market moves, in the momentum, with the momentum of the market. So you can definitely take your trading into a next level. So we're going to learn how to trade intraday. Of course, the most important thing is when not to attempt to take intraday trading. And also, I'm going to reveal how to enter and how to exit on the lower time frames, because I understand that out there you find a lot of how to trade intraday, how to do this, how to do that, how to use Fibonacci, how to use horizontal. But as a trader, in my opinion, I believe you need to know not only how to do it, but when to do it and with what kind of approach to do it. So you want to know how to enter, not just how to read the market, but how I'm going to execute this thing at the end of the day, right? So let's just go through a recap of what we learned in previous webinars, because as I said, all the webinars, they are going with each other, and I'm trying to work them in the way that they follow each other, so it's easier for you to connect the dots and at the end of the day to experience and become the trader you always wanted to become. All right, so we said an uptrend. The simplest thing people can see on the chart and the hardest thing to execute. Why? Because when we see an uptrend and we all understand that, okay, I have a series of higher highs and a series of higher lows. This consists of an uptrend, and I have these impulse moves, which are moves aligned with the predominant direction, and then I have the retracements, which are moves against the predominant direction. But what our human mind in our nature forces us to do when we see this move, instead of explaining it to ourselves as the way to get ready and participate in the market, This one here, because it consists of red candles, it makes us experience some level of fear within us, and this doesn't allow us to press the trigger and participate in the uptrend. And we are trying to find counter trend trades, as we call them. We are trying to find trades against the trend. All right. And then we see this move to the upside, of course. And when the market is here, somewhere here, we say to ourselves, oh my God, this is an uptrend. Why I didn't enter from here? But now it's too late, right? Or when the market comes here and breaks a little bit higher, we say, oh my God, I want to get in with this move here. I don't want to miss out. So we don't get at first. So here are two important things. We don't get into the trade at first place because we are scared of losing. And then we enter here because we are scared of missing out. So keep these two things in mind. Most of the time, especially beginner traders, they operate their trading because of the fear, not because of the probabilities of, if I get here, I have a high probability opportunity to experience a positive outcome in my trading, and that's why I participate. No, they participate because they scared of either not to miss out an opportunity, or they are scared to participate when they have to participate in the market. So keep this in mind, and we will try to slowly with your engagement here, guys, I'll try to help you and get rid of these fears in your trading. All right. So an uptrending market, it's the market that consists of higher highs and higher lows. A downtrending market, it's the opposite. It's a market that consists of lower highs and lower lows. Here it's the low. This low registered lower than this low, so it's a lower low. Here it's a high. This high registered than lower than this high, so this is a lower high. So in this occasion, what we are trying to do, as we will see next as an intraday traders, we're going to try to find ways to get into this move, but with the predominant direction. We want to trade with the trend. As you heard many times, trend is your friend. When we see an uptrend, it means momentum is building to the upside. It means if there are 100 people trading this market, most of them, more than the half, they are buying. So what is the highest probability happening in this market is to see prices climbing higher. So where I would like to place my trades, on the buyer side or on the seller side? Definitely on the buyer side. And oppositely here, definitely on the seller side, because the market is moving downwards. The market is building momentum to the downside. Then we have this structure, the range market analysis, and we do see price fluctuated between a support and a resistance, two boundaries. When it comes there, it pushed back. When it comes here, it pushed to the upside, and so forth and so forth. But this at some point, the price is going to just break out either to the upside or the downside. Excuse me. And it's going to create a trend. This is very low probability trades to trade these markets. However, do we trade them? Absolutely, we trade them, but we manage our risk accordingly. Do I really trade intraday when I have ranging markets on my higher time frames? I don't do that, and that's what I'm going to teach you Also on this webinar, I will teach you how to trade with the highest probability in the market, not with the lowest probability in the market. And here we come. So first we have to learn this. What is the methodology, or what's the process we have to use when we want to trade intraday? It's not enough to just go on the execution time frame and press the trigger. All right. Now, just for this webinar purposes, when I refer to intraday, usually I refer to 5-minute charts or 15-minute charts, excuse me. So for me, when I do intraday myself, I do 5-minute charts trading. I don't do anything else because I will explain you how I trade them. All right. I make sure I'm in with the best momentum in the market. So with the highest probabilities in that particular moment. And I understand that markets, they're not going to offer the opportunities for unlimited amount of time. So I prefer to get in and out fast and then sit tight and wait for the next opportunity. So we need to take in consideration two things when we are trading intraday. Two parameters. The first one is the direction. Where are we going to find direction? Doesn't mean because we have a buy and a sell button, we can just blindly press the buy or press the sell button. We need to follow, we need to create a process that we will follow it all the time. Now, higher probability trades, they come when you are trading with the trend. That's where the momentum goes. And if you need to understand more the trend, please refer to the webinar I've done about how to read the trends. It's on the Trading Spotlights on the YouTube channel I share with you guys. Watch it as many times as you need, because that's the whole grail of trading. If we try to participate in a move that all the traders, let's say there are millions of traders interacting with the market, but I will just say, let's take 100 traders. They see the same market, let's say Australian dollar against the US dollar. All of them, they say they see the same picture on their screens. Let's say that all of them, they are watching the 5-minute chart. Okay. So we have all the market participants in the world, 100 market participants. They watch the 5-minute chart and they do this move. So these 100 traders, they move the market based on this assumption. And we see that when the price is being bought on every dip, these traders, they make sure that the price registered new highs every time is being bought. So where is the momentum in the market? Where are the money flows? They flow to the upside, right? So why should myself or yourself, when we see this particular behavior, to try and interact with these minor retracements in the market? Right, that's the first thing you have to understand when it comes to trend trading. Then, what do we need to know? First, we need to go to the higher time frame, and for me, a higher time frame, it's the daily chart. High probability time frame, it's the daily chart. So I go to the daily. Up, come on. Okay. Sorry for my the way I write. It's by using the mouse, and I hope you understand the letters here. It says daily chart, and that's what I use as a higher time frame. And what I want to find out from the daily chart, I want to see the direction of the market. And guys, we're going to go to the charts and I'm going to show you a few examples. So the direction of the market, if I have an uptrend, then I want to go a step further. If I have a downtrend, I want to go a step further before I go to the execution time frame, to the 5-minute charts or 15-minute charts, and take trades. It's not enough to have an uptrend or a downtrend. That's the first mistake traders do. They just go to the daily charts. They see, let's say they plot moving averages, or they plot some Bollinger Bands or trend lines, whatever, and they just see that the market, it's moving to its direction, let's say to a downtrend. But in which stage? Then we have the stage, the second thing, the second part is this one here. We have the stage. In which stage is this market? Is it in the impulse move? Let me show you here. Is the market, if we are in a downtrend, is the market in this impulse move, in the A, where the money flows, or it's in this retracement at the B, where the take profits taking place? That's the question. So I see an uptrend or I see a downtrend. I see an uptrend or I see a downtrend. When I want to trade intraday charts, I want to go one step further on the daily chart and pay attention to the price action, because the price action, it will tell me most likely if I am or I will be in a retracement mode, or if I am or I will continue be in the impulse move. I want to trade with the predominant trend, but also with a price action that indicates that I have high probability to see continuation in this move. So let's take the first, the uptrend. We identified that we are in an uptrend. Now, before I go to the 5-minute chart, I want to see something to tell me that at this day, today on Tuesday, if I go to the 5-minute chart, I have high probabilities of experience winning trades. So how can I achieve that? If I observe the price action on the daily chart and it's a bullish engulfing or pin bar, both are the strongest, in my opinion, reversal price action signals, or if I have a bullish continuation candle, these 3 candle formations, they increases the odds that if I go to the lower time frame, I can find a good trading way. So let's go back. Let's say we are somewhere within this uptrending environment, and we want to go to the lower time frame, to the 5-minute chart, to execute. So we come to our instrument, we identify that the market is trending upwards. Fantastic. What do I want to trade on the 5-minute charts? Question marks. I want to trade to the upside, right? Yeah. But before I go there, I need to see if the money will flow today, or if the money has very high probability of flowing in this particular moment in the market. And how can I do this? I will observe the price action, the previous day's price action. If, let's say, I'm somewhere here and I see a bullish engulfing candle, nice bullish engulfing candle, it shows me that bullish is most likely to be built the momentum to the upside. So today, if I go to the 5-minute chart, most likely I can utilize and capitalize on the move. We will see how to enter on the 5-minute chart. Okay, but these two components of the trend to be present and a strong price action indicates either the retracement, if we are on a retracement here, a reversal price action to be occurred to show us that, okay, we can go to look for buys, or if we are in that impulse move, a continuation candle to be appear. If we are anywhere here, a continuation bullish candle to be present. And then on the other side, we have the downtrend. Let's say, like an example we're going to see today, it's the Australian dollar against the US dollar. The Australian dollar against the US dollar today, it's in a downtrend. So first thing, higher time frame, direction is down. Okay, tick. That's the first thing. The second thing, we have to go to the second thing. Yesterday, did we had a bearish engulfing or pin bar reversal or a bearish continuation candle? If the answer is yes, then we go to the lower time frame. Okay, so if we had in this retracement mode somewhere a bearish engulfing to show that bears, they're going to appear and reverse the price to the downside, or a pin bar to show the strength on to the downside, then we can definitely go to the lower time frame, 5-minute charts, 15-minute charts, and start looking for our catalysts that I'm going to show you the catalyst as well. Now, you see here, we have, you see here uptrend analysis, downtrend analysis, range market analysis. But here, to go on the intraday trading and to trade the intraday charts, I didn't include the trading market, the ranging market analysis. I include only the uptrend from here and the downtrend. Why not to trade when the markets are ranging on the daily charts? The answer is because when the market are just fluctuating, the price fluctuates between two boundaries, resistance and support, we don't know at which point the opposing force will appear. Nobody can predict with high probability outcome at which point exactly the market will reverse, at which point exactly the market will continue. But unfortunately for the human mind, and the human psychology shows that when we see the price moving within this structure here, we have more faith in ourselves to take the trades because we can see that it bounced from here, so it's going to go up there. We have defined entries and targets, and it's something we don't have it in the trends. But when the market fluctuates and it's indecisive between two price levels like this resistance and this support, unfortunately, there is no statistical high probability outcome. We don't know where the majority of the money flows. So it makes it very low probability trading. However, we experience a lot of winning trades, but this doesn't mean it's a high probable outcome. We can have a high probability trades, and we can lose trades. We can have low probability trades, and we can win trades. So the losing and the winning outcome in trading, it has absolutely nothing to do with the nature of trading. This is just a normal consequence in trading. It has nothing to do if they have a high probable opportunity that shows high probability to win the trade. Does not mean in any way that this trade cannot be a losing trade. That's why we call it probability. And one of the things I teach when I do the trading psychology sessions is to start thinking in terms of how the market works. And that's another area. You can join my webinars. I'm going to have one webinar next week. Most likely you guys in Australia it's going to be a bit late because I do it afternoon European time, EST time actually. So I think maybe it's going to be easier for you to watch it on the recording. Okay, but if you subscribe on the webinar, you're going to see the notifications, and also if you subscribe on the YouTube, when we're going to upload it, you're going to receive the notification. So just make sure you don't miss the psychology part of the trading, because it's important, very important aspect for a trader. So I hope we understand this one here. Higher time frame provide direction. We look if there is a trending market, and if there is a trending market, then we go one step further and we see the price action to indicate in which in which direction the money flows. At that day, we want to do intraday. And we said that with the ranging market, we don't do intraday trading because they are very low probability trading markets. So it's better if we just stick, if we want to higher time frames, if we would like to trade them, but not on intraday. Next, it's time for execution. That's where many people, although they identify, they spot well the market, we are in an uptrend, we want to buy, or we are in a downtrend, we want to sell. Okay, we confirm the price action. We know we have a high probable outcome of the, let's say we are in a downtrend like the Aussie US dollar. So we saw bearish continuation candle downtrend, but many of people today, they told me on the webinar that they enter on the 5 minutes, 15-minute charts, 1 hour chart yesterday, and they were losing money. And this is something because the way people express themselves when it comes to trading, like I trade intraday because I don't have patience. That's unfortunately what they teach you guys out there, other firms or educators. If you are a fast-paced person, or if you don't have the patience to trade on the daily charts, on the 4-hour charts, then you go intraday. That's not the purpose of intraday. The purpose of intraday is to capitalize on the momentum within the day, considering the fact that you have the privilege of time to be in front of the chart and you understand how to trade intraday. It's not just for fun. There are people, and maybe at some point you're gonna risk a lot of money in trading. So I want you to make sure you understand the core of the intraday. Okay, so how to identify intraday opportunities will come from the daily charts and not from the 5 and 15-minute chart analysis themselves. Then how do enter in this market, and again, I'm going to go back to the example of the Aussie against the US dollar in a while. Let's see how can we enter on a 5-minute chart in a market that the daily it's up and we have a strong candlestick pattern indicates that today the price can still keep moving to the upside. So on the 5-minute charts, I'm going to refer to 5-minute charts because it's easy for me, but you can just think of 15 minutes, 1 hour chart as well. I want to see on the 5-minute chart higher highs and higher lows. I need to see on the 5-minute charts higher highs and higher lows. Guys, get this right. We have to see, it's important, and I mark it with stars. We do have to see on the execution time frame higher highs and higher lows before we committed to any buy or sell signal. All right, that's what people, unfortunately, they don't understand. They understand really, really well, exceptionally well, the price action, the trend on the higher time frame. They get it. Theo, we know. Theo, I get it. Theo, I understand. But when we go to the 5-minute charts, I see a lot of mess. Sorry for the word. But if we don't do this to use the higher highs and higher lows on the lower time frames, we're gonna find it hard to trade successfully the lower the intraday trades, the intraday charts, to take intraday trades. So, and then after we identified the higher high and higher low on the 5-minute chart, then and only then we go to execute a plan. Then and only then we are looking for our checklist. Guys, you're gonna see in many occasions that markets on the 5-minute chart, let's say the daily is up, the price action is up, but the 5-minute chart, it's moving with lower highs, lower lows, or it's just moving like this, sideways. What do? We do nothing. But the daily was up. The price action on the daily was so strong. Why do we do nothing? Because there is very low probability, if we don't see this pattern on any lower time frame, to execute. But Theo, the daily chart at the end of the day, it had, let's say, the bullish continuation pattern. Let's say the trend is up, and on the 5-minute chart we saw this fluctuation, but at the end the price closed like this on the daily chart. And if I have been entered somewhere here, then by the end of the day I could be in a huge massive profit. Okay, now the question for you, because I associate with that. I was sitting behind the screen and learning like you learn. I had the same questions. I went through the same obstacles, the same psychology, emotions, everything. I resonate with you. So how do we feel here? We feel betrayed? Maybe yes, but should we feel betrayed? No. Why? Because on the 5-minute charts, guys, on the 15-minute charts, the volatility is so much. And this, if you entered here on the daily chart, your stop will be below here. So you could risk here about 100, 150 pips, 80 pips in the best scenario on the daily charts. So you risk 80 pips for stop loss, and to make 1-to-1 you need 80 pips. But for intraday, our swings are small compared to the daily charts, and that's why our stop loss are 5, 10, 15, 20 pips maximum. So we get within the momentum of the market. I hope you guys understand this. Then how to enter? We either put buy limit orders on the retracements or buy stop orders. The same for the downtrend. If I want, like the Australian dollar with the US dollar, the daily was down, the price action on the daily was down, but yesterday, literally the 5-minute chart, guys, was just doing this. So there is no reason on earth anyone to attend from now on, now you know it, to attend and take trades when you see that the momentum on the 5-minute chart, the momentum of the day changed and buyers are in control. We need to see a new low register, lower than this low, retracement, boom, entry here, exit there. We see a new one, boom, entry here. We take the trade, exit there. And we take this simple way of trading, but by far the most efficient and high probable way of trading. Now, here it's a bit more visual for what I told you about the engulfing and the bearish continuation or bullish continuation candles. We are in a downtrend and we see bearish engulfing. What do? Don't confuse the daily trading. It's a different story. It's a different entry parameters if we want to do daily trading. Now I'm talking about intraday trading. I'm talking about you want to get in and out as fast as possible, as soon as possible. So I identify the bullish, bearish engulfing on the daily chart in a line with the downtrend. You see the downtrend, lower highs and lower lows. So in a good area of resistance here. So this indicates that momentum will be built to the downside. But maybe the next day, the market, it's going to push a little bit up to here before it's going to continue down. If we go on the 5-minute chart, we're going to see these higher highs and higher lows. So do we attend to do this on the intraday? Absolutely no. And that's where most of the traders, they are losing money on this misunderstanding of how do we interpret the daily price action and direction with the intraday entries. Same with the bullish engulfing here. I see a bullish engulfing. One of the strongest signals within an uptrend indicates that the market can push to the upside. Then we have direction. First direction, it's up. And second, price action indicates that buyers, they will step in. So what do? I go to the 5-minute chart. But do I just go to the 5-minute charts and I buy? No, absolutely not. I have to be disciplined there. If the 5-minute chart, it's just showing me this retracement within this bullish engulfing of the daily, then I don't do anything. I cannot do anything. I have to wait to see that the market shifted from a downtrend to an uptrend. And there are two ways to play it. Either I put a buy stop entries here, buy stop, and take with the breakout, or I do the conservative way to put a buy limit orders here, buy limit orders. When I want to do buy limit, it means I want to buy in a price that is lower than the current price. When I want to do a buy stop, it means I buy when the price reaches higher price than what it's currently now. Same with the bearish pin bar in a downtrend or the bullish pin bar or hammer in an uptrend. If I see this in a line with the downtrend, then it's a good indication that maybe sellers, they're gonna come in the market. But How do I go to the 5 minutes and trade it? I have my confirmation from the daily direction is down. That's the one thing. And I have the second thing, the price action indicates that the sellers can step in today. So I can go to my 5 minute chart, but if I see these higher highs and higher lows, or if I see this sideways, I can't do anything, because what did we learn? We learned that the market in an uptrend, it's only validated high probability buying positions. And in a downtrend, it's validate and high probable sell positions. So let's see this example from the Australian dollar against the US dollar on the daily. That happened 2 days ago. On Friday, or no, yesterday, we were trying to, yeah, that happened on Friday, sorry. And yesterday, we were trying to find selling opportunities. So from what we learned so far, we need to check two things. Guys, make them as a checklist if you want. Just print it, write it in front of you, and just do it very mechanical at the beginning. You need to be mechanical trader at the beginning, and then you can flip it to a discretionary trader. So we see this bearish candle in a line with the daily direction is down. We have lower highs and lower lows. So lower highs and lower lows, downtrend is in place on the daily chart. Then price action. It's a price action indicates that sellers are in control. So perfect. What do? I go to the 5 minute chart. So in the 5 minute chart, what do I want to see? I want to see these lower highs and lower lows. Guys, that was from the time you guys in Australia were trading, Tokyo and Asian in general, and Sydney session until London session. Do we see any lower highs and lower lows that allow us to participate in the downtrend? No. Why we don't see it? Because that's how the market moved. It's nothing wrong with us. It's nothing wrong with what we do. It's nothing wrong with what we analyze. And it's nothing wrong with the market. It's just what it is. So you don't need to feel that you wasted time watching the chart. No, that's what intraday trading is. If you want to experience, and I'm telling you, you can experience and you can achieve great trading results. If you start applying a little bit discipline, if you learn a little bit how the market moves in reality, and if you just stick with a plan at the least for some time before you flip to another plan. I encourage everyone to trade on a demo account first, because you risk before you risk your hard-earning money on a live account. Just get a bit confidence with what you do. But really, guys, if you go, I can go through hundreds and hundreds of these examples and show you the same thing, like this one here, bearish engulfing with the daily is down, price action is down. The next day, if you go to the 5 minute charts, you're going to see that you had at this higher high. At some point, we have this low, retracement entry. When you find this type of market condition, you can take multiple positions in a day. But sometimes the market maybe shows you that sellers, they were in control here. But when we want to trade, we don't see these lower highs and lower lows. And this one here, it's not a lower low in the market based on the market structure, because this point here, it didn't achieve to create a high to create market structure. So this swing here, it's not a valid swing. please make sure and watch also the webinar I've done with how to read the market structure properly. And I explain, and many traders, they told me on the live trading webinars as well, and also on the comments you can leave after we finish this webinar in a while, that many traders, they couldn't understand why this wasn't a valid swing. And when they see this lower low, they were trying to sell from here because they thought that market structure changed. But a market structure, it's only when we have a new structure in the market. And obviously this point here, it didn't achieve to give us a new structure in the market. So it's not a significant swing. So the move came and the broke of this low here, it's not a move that we take in consideration because it wasn't a significant low to be broken. It was, let's say, for a technical analyst, it wasn't the swing to look for. That was the market structure. We have this swing upwards, and then we have this this pullback to the downside here, and then this was a higher high. So let me just for a few more minutes, guys, let me just go to the MT5 and show you example here I prepare for you on the pound US dollar. So on the pound US dollar, some weeks ago, we had this downtrend. Then the market came to retest this resistance, and we put this bearish engulfing candle. What do? The next day, we go to the 5-minute charts if we want to intraday, right? Up. So we go to the 5-minute chart. That's when the Asian session started. And this, if anyone was trying to sell, how could you sell this one? Based on what we learned today, we have to wait for the market to give us a lower highs and lower lows. So which market structure was a significant in this market? This was the origin of the move. The move came all the way up. It came here. It failed to close higher than this one. So this is not a valid swing. Then the market was moving in a nonsense environment all the way here because that was the valid swing. Or if you want, now I see it more closely, it was this one, the most valid swing, because this one here created 2 bars retracements, created all this impulse move. To be very, very accurate, it was this one here. So only when this low point broken to the downside, we can say that on our execution time frame, we have momentum in a line with the higher time frame. So the market pushed to the downside only here, and that was 7 a.m. GMT time. So during the Asian and Sydney session, the market was just pushing upwards, but that was against the daily time frame direction and price action. So we had to wait until the market comes here. We had this lower low, then we had this pullback somewhere around this area here. We could enter trades here. We could take profits there or fib retracements, however you would like to take profits. Then the market gave us another opportunity here. It pulled back, so we could have our sell limit order here or a sell stop from this swing here. Either way, we could have a couple of trades for the day, and all of them more than 1-to-1, 2-to-1 trades, that's the highest probability of trading. And you don't stuff around within ranges, because if the momentum is there, it's going to just play until the recent swing in the market. Then let's go to another one, euro against the US dollar. The daily chart 2 days ago, it shows that most likely resistance here, sellers can come in, confirmation of a nice bearish candle. So why not to attend and see if we can take some sell trades, again, selling trade positions in align with the daily time frame, direction, and price action. Let's go to the 5-minute charts. What do we have on the 5-minute charts? Can we see something? The session starts from there. So far, it's nothing here. We have this line here. The market make a higher high. Nothing here, because here it's our valid swing. That was the swing here, created, then this one here. Then the market broke below this swing. It gave us this lower low. That was again very early, almost on the European Open, pullback all the way, trendless nonsense environment here. And at that point here, we had a break, a clear lower low here. Okay, that happened yesterday. So if we could enter here with our stop there, which it was the last swing broken, let's say, for this structure, then we would experience a losing trade. So that's fine. That's part of trading, guys. Losing trades, they're going to come. I'm here to prepare you that there is no system in the world that it's going to give you only winning trades. All right. So you experience a losing trade. And the last example, let's say, actually, I now see the time. We went more than the 1 hour. So unfortunately, I don't have the privilege of time to go to another example due to another webinar that's going to take place. So guys, that's all from me today. I hope you have a great session and you totally find a lot of value from this webinar. If you need anything, please reach to us through emails or on the social media. It will be a pleasure to see you on the webinars I do Monday to Friday. You can go to our website and subscribe for the webinars. I wish you to have a good night there in Australia, in that beautiful place, and happy trading. And I'm looking forward to see you again soon on the webinars. Thank you so much, and bye for now.